All right. Matt, the mortgage guy. First week of May 2022. We got the Fed meeting coming up on May 3rd and 4th. They're going to release their comments on the 4th. I'm going to tell you what to expect, what they have said, what they're going to say, how that might affect the markets. More importantly for this channel, how it might affect mortgage rates going forward. So stay tuned. I'll get into it, give you my take, what I think you should expect, and what to watch for afterwards. All right, Matt, the mortgage guy here. It is the first week of May, and the Fed is meeting for the third time, the third meeting out of 8 total for the year, right? And if you follow this and you're looking at what they've talked about leading up to this meeting, you know that a 50 basis point rate hike is what the consensus is, what most people think is going to happen. What some people don't necessarily understand is that the market already knows this. So the 30-year mortgage rates have already baked this in, right? The market's in anticipation, just like when a company does something that they've been talking about for 3 months and their stock price doesn't move the day they do it. Their stock price moves in anticipation of it, or once the market understands, hey, this company plans to do X, Y, and Z, right? So, you know, the mortgage market works quite the same, where, you know, we can anticipate it. And really, if you look at what's happened to mortgage rates over the last month, they've gone up quite a bit. So what that means for you as a consumer, as somebody who might be taking out a mortgage anytime soon, or just an onlooker who's interested, right? Real estate agent, financial advisor, or the like. What I would say, first and foremost, is that you're likely not going to see a lot of movements in mortgage rates. You've already seen it, right? The two things that we are going to be looking at, and by we, I mean anybody who's looking, watching, listening, for the Fed's comments that come on May 4th, 2022, is what they say about their balance sheet normalization. And, you know, to sum that up real quick, is when they've been buying mortgage-backed securities, that has been pushing interest rates down. As they increase the Fed fund rate and they do this balance sheet normalization, which is selling some of these mortgage-backed securities and treasuries off of their balance sheet, that is going to have an effect on long-term interest rates, i.e. mortgage rates, right? So they've talked about what they're going to do, how much they're going to do. And in this meeting, that's really the only thing that's undecided or unknown from somebody like me who's an onlooker, right? Is what they're going to say specifically in regards to balance sheet normalization. Are they going to talk about, hey, we talked about having caps of, what did they say, like 35 billion and 60 billion mortgage-backed securities and treasuries. Are they going to increase those? Are they going to decrease those? Are they going to be more aggressive than they talked about? Are they going to be less aggressive? These are the types of things that can move markets. These are the type of things that can influence those long-term interest rates, 30-year mortgage rates to be specific for most of my viewers, right? So will be very interesting to see. Like I said, the 50 basis point thing is almost a foregone conclusion. If they talk about in June how they might consider 75 basis points, or if they talk about anything about being more aggressive, that could be a market mover, right? And just you know, so that you know, May, June, July, September, November, December. We're essentially this week having the third of 8 total Fed meetings for the year. So we've got 6 more, including this May one. The thought is that during each one of these meetings, we could see a hike up of the Fed funds rate. So far, we've only had one where we upped it a quarter. We, the Fed, right? The Fed upped it a quarter. If we go 50 basis points more here in May, then we'll be up to 0.75. 5 more meetings after that. I think most pundits will say between a quarter and between 50 basis points at each one, landing us somewhere in the 2.5% range for the Fed funds rate, which, as some people might know, was at 0 before we started doing all this. Another interesting thing to consider is I've had more and more folks in the mortgage industry talk to me about a little bit of a longer term outlook. What's going to happen in the next 12 to 18 months? And I can tell you more and more smart people keep talking about mortgage rates dipping 2023, 2024. It changes how I advise clients whether we should be spending money to buy the rates down right now or whether we should wait. And I can tell you it's really interesting. Some really smart people talking about how it's a possibility to get back to a 3% 30-year fixed. Some of them think it happens as early as early 2023, right? And so stay tuned for that. There's going to be, differing camps as far as what they see for the future of interest rates. But know that if we go into an economic recession and the Fed has increased the Fed funds rate from 0, and over these next 5 meetings, if they go to 0.75 to 1.25 to 1.5, then to 2, then to 2.25, 2.75, whatever we land on, they're going to have that ammunition to go back the opposite way, which has the opposite effect on interest rates that can pull rates back down, right? And a lot of folks think that's what's going to happen, right? Is we already saw GDP growth go down in Q1 of 2022. If we continue to see a decline, if we continue to go in the direction we're going in the economy into a recession, the Fed's going to have those levers to pull that ultimately result in mortgage rates coming back down. So interesting times, right? I was looking at the different things that the Fed's going to talk about and all the different economic things that are going on. The stock market has been crushed, right? And these Fed increases that increased interest rates in which institutions can lend to each other is really a bad thing for the stock market, right? And when you see, stock market posting one of its worst months in April, and the forecast for the future of the stock market, I think today was another bad day for the stock market. Today being May 2nd that I'm recording this, probably going to be May 3rd that it goes out. 9.2% down year to date on the Dow, 13.3% down year to date on the S&P. Interesting stuff. We'll see what happens this Wednesday. They meet the 3rd and the 4th. Then on the 4th, they give comments, and those comments are generally where the market moves, right? The things that they're going to do, like I said, some of it's already baked in. Really important to see what they say. So let me know your thoughts. Let me know what you're seeing, what you're hearing, what you think is going to happen for the remainder of 2022. I'd love to hear it. As always, if you're looking to get yourself pre-approved, you're looking for mortgage advice, you're looking for refinance scenarios, me and my team are more than happy to help. Go to greatmortgagebroker.com, fill out the quick form, let us know where you're at, how we can help, and we'll be in touch soon. Again, greatmortgagebroker.com. Matt the Mortgage Guy signing off. And until next time, we gonna see.